Good morning, traders. My name is Christopher Vecchio, currency analyst with Daily FX. Today is Monday, February 3rd, 2014. These are your FX headlines as we turn the page from Europe to North America. And already the British pound is reeling as we head into this first day of the week. A weaker than expected PMI manufacturing report coming in at 56.7 versus 57.3 expected. It's having the pound give a little bit back. In light of the fact that we do see some commentary that the Bank of England is getting ready to change their forward guidance strategy, we do have that Bank of England meeting this Thursday. The pound dollar is looking a little bit more bearish. And technically, we see that there's potential for a bit of a rising bearish wedge here from the July, November 2013, and again, the January 2014 lows. However, before we get excited about this downturn, we're going to have to get a daily close under 163.10. We see this served as support during the second and third weeks of December, again in middle of January. So below 163.10 would give confidence for a move below. Still, I don't know how far it has a chance to run. If we look at going back on the chart, 2011, 2009, and October 2013 highs coincide with a pivot on the 17th of December. And so if this is really a longer-term bull trend emerging, this bearish wedge shouldn't be too concerted lower. In fact, we'd be looking for support right near 162 if that trend's going to be there. Pound yen actually might be signaling that the losses may be over. We go to pound yen and look at, say, a 2-hour chart, and the triangle that we were looking at last week, the measured move of the 100% extension comes in at 165.54. That's right near the swing low on December 5th, and we see that the market is starting to stall ahead of it with a hammer forming on the 2-hour chart. So if this is really a bearish market, we'd want to see a rebound up towards that 167.80. That former support area before the next wave of selling comes in, but right now this could be an exhausted market. We would be looking to the dollar-yen for direction, and we're going to have room for dollar-yen to give us guidance over the coming hours. We do have the ISM manufacturing survey for the month of January due out, 56.0 from 57.0 expected. Of course, there are some concerns that the U.S. economy weakened into the new year, and there's a lot of talk about potentially the weather having an effect. Whether or not you believe this weather business, there is still potential for moves on it. So incoming U.S. data, very spurious, could drive a lot of volatility. This week should be more volatile overall. We have RBA tonight, ECB and BOE on Thursday, NFP on Fridays. I'll be back tomorrow, of course, to talk about all these events and the potential trade setups they might bring. Please join me at 6 Eastern, 11 GMT and Daily FX Plus. Look forward to seeing you then. If I don't speak to you the rest of today, good luck trading.